Stocks in the red this morning here as the street heads toward the close of the worst week in a month. UBS Financial Services Director of Floor Operations Art Cashin joins us this morning on the CNBC Newsline. Art, can't say that you didn't warn the street about the prospect of heightened geopolitical worries, the prospect of higher yields. I wonder if you think 5% is any kind of ceiling now.
Actually, the technical ceiling on the cocktail napkin side, call, is probably around 5.25. But we did touch it yesterday very briefly in after hours. Traders are watching. What you've got there is a push-pull between the flight to safety with all these wild things going on around the globe geopolitically, and the fact that the usual buyers of U.S. bonds, the Chinese and the Japanese, are pretty much elsewhere. The Chinese are having their own economic problems. The Japanese are trying to get things started. So the normal buyers aren't there, and that's why yields are going up despite what should be a general flight to safety. And then to take us way off course, Carl, this thing with the Speaker of the House is so bizarre. We're in a near state of war, and heaven forbid, and I say heaven forbid, if something should happen to both the president and the vice president, ordinarily, the presidency would then move to the Speaker of the House. But would it move to the president pro tem of the Speaker pro tem of the House? And what are the constitutional rules for that? And to make it even wackier, only the House of Representatives can declare a state of war for the nation, and without a full Speaker of the House, cannot happen. One can only imagine that in Moscow and Beijing and other places, they're sitting down and saying, a very confusing American way of politics, and can we do anything to frustrate it? So. Right. May you live in interesting times, and here we are.
As somebody said yesterday, if it had happened to any other country, the U.S. would be calling for stability from afar. That said, Art, in terms of levels here, I mean, there's been a lot of discussion this week about resilience, and you should hand it to equities for holding in 4,300 at the time. I wonder where you think now the bulls, what's the must-have, the must-do?
The really must is, in general terms, 4,200 in the S&P. And actually, if you want to get technical and extra sharp in the pencil, it's about 4,175. So if you break the 4,200, that may be a bit of a culture shock. And if you then have a cascade sell-off that takes you to below 4,175, I think you're going to see people start to hunker down and maybe take some money out.
You know what's weird, Art, is that so treasuries are not acting like safe havens right now. The dollar also, it's weaker on the week. So usually the dollar rises during geopolitical unrest when gold is catching a bid here, Bitcoin's catching a bid here, dollar's weaker. It also rises when treasury yields are rising. So this whole notion of safe havens is sort of being flipped on its head.
No, it is being twisted and turned here, Sarah, and that's why I say, if you went by the book, if there was such a book, and said, well, okay, this leads to this, and this has been a bizarre 2 months. Nothing has led to what it's supposed to lead to, and therefore it's difficult to guess. And as I say, heaven forbid the geopolitical leaders of our adversaries may be looking and saying, is there anything that we could do to confuse this even further? So this is going to be an interesting weekend. You have a Muslim day of prayer today and a Jewish day of prayer tomorrow, and the ground offensive looming and looming and looming. This is not going to be one that people are going to sleep comfortably through the weekend.
Art, we may need to just scrap the ice cubes this weekend and just drink it neat.
Yeah. I always drink it neat.
Anyway, Carl, I have 2 extra bottles.
Art, before we let you go, I mean, if anybody wrote the book, it was you. So I just want to end here. Is there any tell in you for this market right now in terms of what the main thing you're going to watch over, whether it's, with the markets closed this weekend or early next week?
Certainly, you want to stay above that 4,200. Okay, when they broke 43, it was there, and I think what I'm going to watch is what does happen with that yield on the 10-year. Do they revisit 5, and do they punch above it? I think if they punch above it, it might be like touching the third rail, and you might get a response in the market. So 4,200 at worst case, and then 5% in the 10-year yield. We've got a lot of touch pads around here.